The broadcast is now starting. All attendees are in listen-only mode.
Okay, good afternoon, everyone. Today is Thursday, June 6th. 1 second here. What a way to start the webinar. Yep, this is live. One sec. Okay. Let me get everything organized here. This audio. All right, that's the mute button. Okay, let's try this again. Okay, June 6th. It's about 10 to 1, so I'm starting the room a little bit early today. Not much is going on right now. It's another episode of CFRN Thursday where we go over the trade setup in the CFRN room, but we do it in slow motion. Okay, so if you're brand new, this is going to be a great cheat sheet for you or a syllabus for you to lean on, because what we'll end up doing is breaking down the trade setup that Michael is doing in the training room. Again, we'll do it in slow motion, and this will give you a more of a eyes wide open approach to what to expect, to see what's going on in the room as far as the setups, some of the things that Michael's talking about. We'll go over some of the buzzwords and some of that language that he's throwing around in the room. Okay, so we're going to get you familiarized with what's going on there. Okay, so again, good cheat sheet, great syllabus for you to lean on. Okay. Secondly, if you are a CFRN member and you're hanging out with us, that's great. The advantage to you guys is, number one, more screen time, right? We're going to be in front of the markets, learning the personalities of the markets that we're trading. Also, you'll get to see more setups, okay? So the more things that you're exposed to, the better off you are going to be. Now, if you're spinning your wheels, that's okay. People fall into traps and stuff like that all the time. So I'm going to go over probably 2 or 3 big things that I recognize, that I see that people kind of fall into the traps that they fall into. Okay, so I'm in the room every single morning. Okay, and I've been from day one. And across, over the years, I've done a lot of screen sharing and changing back and forth screenshots and charts, and I've critiqued a lot of work over the years. Okay, so I know some of the things that you guys are maybe having trouble with. So I'll labor over some of those things. All right, there's basically 2 or 3 of them. Okay, so welcome. We're going to spend about an hour in here. The first order of business is going to be the disclaimers that I have to present before, I have to go over before I present. Secondly, we'll go over the trade setup. And then third, we're going to hop inside a live market, and we'll find that same setup. I'll identify what's going on. We'll hop inside the DOM. We'll enter the trade. We'll manage the trade, and we'll exit the trade. Okay, that's the game plan. Okay, you're looking at the indicators now. If this is your first day, okay, this is a CFRN indicator set. It could be applied real easy with a few left clicks. Okay, platform that I'm featuring is DtPro. That's the platform that I support. Okay, same platform that Michael and Dwayne are using. Okay, so if you are going to ultimately go down this path, it may not be a bad idea to be using the same platform that the educator is using, also that I'm using, because in the end, if you do have trouble, you can always call me, and I'm always here, and I always pick up the line. So you'll have a lot of one-on-one sessions if you need it, and you get to talk to a live body, so that's a big plus one. All right, so that's the game plan for this afternoon. I get going a little bit early because it allows me to go over the disclaimers. Again, I don't really like to throw them up, tell you to take a few minutes to look at them, and then throw them underneath the blanket. I will talk about it, okay? Because I've been doing this for about 25 years, okay? So I really have seen the good and the bad and the ugly when it comes to trading over the years. Okay, so let me get my marker out. Let's start talking. All right, the disclaimer. Not a great way to start the webinar, talking about risks and stuff like that. I should be hypnotizing you with how much money you're going to make and how this is the greatest thing ever. But that's not fair, okay? Because a lot of guys that are coming to CFRN, they're brand new. And this disclaimer is meant for the guys that are brand new, okay? And basically, it says, look, you're going to get into the space. If you are going to trade futures, this is a leverage space, okay? And you can lose everything and some from your trading account if you don't have a trading plan, if you don't have stop losses in place, if you're not engaged in your trading account, if you're not engaged in what the market's doing, if you're not aware of what the news items are for the day, if you're not paying attention to what's going on, this disclaimer is going to hit you right smack dab in the face. Okay, and like I said, over the 25 years, I've seen it happen. So that's why we talk about it first, okay, because it is a reality. Okay, now, if you are going down the CFRN plan or path, right? Well, here, we do have a trading plan, right? Basically 4 simple rules right in front of you, okay? So you're going to have a plan. Every trade has an 8-tick stop attached to it. All right, so we check that box off. You're going to be on a 4-tick range chart, okay? So that means you have to be actively involved or engaged in the market and what it's doing. Well, it checks that box. If you are a CFRN member, okay, and you know one big rule is that we don't trade around news reports. Well, you're going to have to be engaged in that that source. So that kind of checks that box. So the bottom line is this, all right? If you go down the CFRN path, okay, yes, you're going to do all those things that kind of water down what this disclaimer is talking about, okay? Does it totally eliminate it? Absolutely not, okay? That's another point to talk about, all right? If you're doing all the right things, you place a stop loss, you're in front of the screens, you have a trading plan, you have all that stuff, right? And then some crazy tweet comes out or something happens with us in China or what have you, and the market goes into a tailspin, all right? There is a chance that your stop may not be elected. What does that mean to you if you're brand new? That means your limited risk scenario now is, hey, I have potentially unlimited risk. All right, you still have exposure in the market. The good thing is, in the end, if the black swan event happens, you'll be in front of the screens. You'll be in front of this tower, okay, where we do our buying and our selling. But you will be involved, you'll be engaged, you'll be in front of a platform, and if all hell breaks loose, all you're going to have to do is hit this hot button. It's called exit at market and cancel. Get you out of the market right away and cancel any outstanding orders you have in that market. Okay, that's the get the heck out of Dodge button. Okay, so again, not a great way to start a webinar, but it is something we have to talk about as registered people. And I'll go over that because I've seen it, and it's not fair that you're not aware of that. So the goal of the webinar is eyes wide open, right? So this is one of those things. You have to be aware of it. Now, I've been with CFRN from day one. Usually the guys that are knocking on their door, okay, are guys that have been to this room and that room and that room and this room, and they learned from this guru and that guru. So this disclaimer, they're really numb to it. Okay, they've been through the battle, they've been through the war, they've been through the trenches, so they're totally aware of this. Okay, so I'm not talking to you guys and not enlightening you with anything new. So I get it. Okay, again, this is definitely a trademark for those guys that are brand spanking new. Okay. The other thing is, hey, the funds that you're putting in a trading account should be risk capital. Hey, if I lose it, it's not going to change your lifestyle. That's the bottom line. Okay. So I think that one goes without saying. Okay. Has to be risk capital. All right. The second slide basically is my relationship with CFRN. I represent Daniel's Trading. That's me right here. Okay. CFRN, they are the educator. It's their indicators. They're the educator. It's their tools. Um, they're a third party vendor. Okay. So BERT doesn't work for CFRN and CFRN doesn't work for Daniel's Trading. Okay. There is a line in between us. Okay. And we don't cross the line and we can't. All right. So that's why we disclose it. Okay. The bottom line is this: if you end up going down the CFRN path and you raise your hand and you say, "Hey, I want to be a member," okay, any funds that exchange hands are going to be between you and them. Okay, it doesn't pass through me and goes to them. No, it's between you and them. Anything on their website, any of their videos, the Logic 247 product, which is this. It's Thursday night workshops, the daily double, concierge trade alerts, anything on their end, you would reach out directly to them. Valerie is a new addition to the support team. You can always contact her. She's great at returning emails and get a hold of people. All right, so she troubleshoots a lot. Dwayne is usually on the radio in the afternoon, and Michael is either doing planes, trains, and automobiles, or he's doing mentoring sessions. Okay, so that's a scoop there. Okay, there's a line in between us. Now, for me, I support the platform, DtPro. The indicators are built inside the platform, so I support the platform, the brokerage, the execution. So if you decide, hey, I'm going to be a CFRN member and I want to use DtPro, okay, you ultimately would end up opening up a trading account with me. Okay. Now the tools are available on NinjaTrader. Like I said, the big difference between us and them is the support. Okay. I'm always a phone call away. So we have someone to talk to, a live body. That's a big deal. Okay. We use the same platform as Mike and Dwayne. That's a pretty big deal. Because if you have questions in the training room, you can ask them and they'll be able to answer it. Everything's been coded inside of DtPro, so it's pretty high speed. Okay, and the platform has all the bells and whistles to it. So, and it's free. So that's the thing. Now, my relationship with them started from the beginning. So before the education and the mentoring part of the program, it was just radio. And I ran into Dwayne, and he had mentioned, hey, you know what, why don't you come on the radio and we'll talk about markets and you can answer any questions that people have. And so it kind of started that way, just on radio. And then ultimately what I noticed in question box was, can you teach me how to trade? Can you show me what you're doing? Can you show me how you're doing it? What are all these lines that you have? And ultimately, Dwayne got together with Michael. I think they're both TradeStation developers. Our platform reads easy language, so I happen to be at the right place at the right time. I support them because they do a great job of teaching people how to trade. Okay, is everyone successful? No. Okay, and I think if anyone says that all their students are successful, they're just lying to you. But the idea is they do the best they can to help you guys, and so and they're very transparent, and they're not hiding anything, and that gives me the comfy cozies to continue to support them and do what they're doing. So a lot of thumbs up to them. And like I said, I've been doing this for almost 25 years, so I add some value to the program. So I've seen a lot. So that's it. That is the disclaimer part of the program. So now we're going to work on the trade setup. And before I do that, just got an email. So stay with me, okay? Okay, don't go anywhere. I want some wheat. Like I said, this is live, so my phones will ring, and I'm getting emails to buy and sell some stuff right now. Almost done. I'm going to sell him crude. And Patricia, buy 1 September wheat. We're going to buy her a wheat. Okay. I think we're good. So let me tell them he's squared away. All right. So there we go. All right. So sorry for the timeout there. Just like I said, I have people emailing me and calling me, and they may give me some orders, so we'll get a little distracted from time to time. But again, we're going to talk about the trade setup. So the first order of business is the time frame. Okay, we're on a 4-tick range chart. Okay, so how do we get there? All right. So if you have DtPro up and running, you might be on a daily chart. Let me blow this up a little bit. You may be on an hourly chart or a 30-minute chart. You might be on a time-based chart, right? That's the norm for a lot of people. The way you get to a 4-tick range chart is in the top left-hand corner of the chart, you'll have a little time frame here. It's 30 minutes with the drop-down box, okay? Go down to custom and select range bar. Make that one look like a fork, then hit OK. All right. Right now, you're staring at the S&P E-mini on a 4-tick range chart. Okay. Now, the first trap that people fall into is they'll go down to custom, and they'll select tick bar. They'll make that 2 look like a 4, and then you're staring at something like this. It doesn't even matter what market you're staring at. If you're looking at a picture that looks like this, it's just wrong. Okay. You need to be on a 4-tick range chart. Okay. Notice the difference. The big thing about this is that the height of each candle, all right, red or green, green, blue, whatever, the height of each candle is 4 ticks in height. Okay. So why is that important to you? Here's the scoop. In the room, from time to time, you're going to hear Michael call out the highs and the lows of certain candles. Okay, he's going to call out the highs and the lows. And the reason why he's doing that is because he's getting prepared to enter in order above or below the current market price. Okay, he's being proactive. All right, and he can do that because he knows the height of each candle, and the height of each candle is going to be 4 ticks in height. Okay, that's why he can do that. So I'm preparing you now. Once you start hearing the highs and lows being called out in the room, I'm letting you know what he's going to do. He's going to do this. He's right-clicking, and he's buying it. He might be buying the product on a stop, like I just did there, or he might be selling it on a stop. Okay, you might be selling it on a stop below the current market price. All right, so hold on. There's my phone again. All right, so what he's doing is he's buying it on a stop or he's selling it on a stop. So if the market decides it's going to take off, okay, blow out of the hole, he's going to enter with the momentum. If the market decides he's going to break down, well, he's going to get in as the market's breaking down. So he's buying it on a stop or he's entering it on a sell stop on the way down. Okay, that's his game plan. Just going to bring it to your attention, all right, because again, this is an eyes wide open approach. All right, so the long-winded explanation, the short end of it is, okay, the time frame is a 4 range chart. Okay, that's where we need to be. All right, we're going to work on the top portion of the chart here. Okay, so here's some buzzwords. The red and blue line is referred to as the MA1. Okay, nothing really fancy about it. Okay, the green line is referred to as the BBC. That is short for bullish and bearish cross, which is step number 1. Okay, combined, here's the deal. If the MA1 is red and crossing the BBC, that's a bearish cross. If the MA1 is blue and crossing the BBC, that's a bullish cross. So the one that's highlighted here is a bearish cross. Why is that? Because the MA1 is red. Okay, that is step number 1 that lights the match to the whole thing. Okay, note this. I didn't say go short, go long, go short. Okay, I said from this point on, once we get the bullish and bearish cross, we're going to be looking for bullish or bearish opportunities, buying opportunities and selling opportunities. Okay, step 1 lights the match. Okay, because here's the thing, after step 1, after this cross here, the normal thing for the market to do after the cross is to gravitate toward the BBC, which is that green line. Okay, that's the normal thing. So we're looking for the normal thing. Okay, we're looking for the market to get up to the green line, touch it, all right, and then close in the direction of the trend, just highlighted here. Okay, the trend is bearish. It's a red MA1, therefore we're looking for a red candle. Okay, that is step number 2 in the process. Step 2 is after the cross, the market's going to pull back to the BBC, touch it, and then we're going to look for a close in the direction of the trend. Okay, now one of the big questions I always get, why don't you just place an order in right here and get short? Because look what just happened afterwards. No. What we're doing with the close of this candle, or with the close in the direction of the trend, we are sacrificing price for action. Okay, another clue or a hint that the normal thing is happening. That's what we're doing. Okay, sometimes the market will just blast right through the BBC. Okay, this way we avoid a stop out by waiting for the close in the direction of the trend. Okay, so again, we get the bearish cross. Okay, our spidey senses are on. We're looking for a shorting opportunity. The normal thing for the market to do is to gravitate toward the BBC. We got it here. And then we're looking for the close in the direction of the trend. We got it here on this candle. Step 1, done. Step 2, done. Okay. Now our eyes are going to gravitate toward the slingshot, or the oscillator portion of the chart, okay, which is down here. Okay. Now, here's some buzzwords down below. Okay. Let's break this down here. The red and blue line here is referred to as a cycle, and the green line, nothing fancy about it, is referred to as the green line. Okay. So why is that important? Well, actually, the trade exists down here in the slingshot. Okay, the whole trade starts here. Okay, so here I'm going to break this down a little bit and tell you why and what's going on in here. What this is telling you, the cycle, the fact that it's red. Okay, so watch this. We have a red MA1 crossing the BBC. That's good for the home team. We have a red candle against the BBC. That's good for the home team. If we want to put all the probabilities in our favor, we would like to also have a red cycle. So when everything is the same color, that stacks all the probabilities in our favor. Okay? And the fact that this cycle is red and has a nice slope to it, what this is saying is that the NASDAQ on a 4-tick range chart on this time frame is bearish. The momentum is bearish right now. Okay, that's what this line is telling us. Okay, the fact that the green line is pulling away from the cycle together with this price action, all right, which is kind of the normal thing, right? We just defined that. What this action, the green line pulling away along with this price action, is saying, look, this just might be a pullback in this ongoing downtrend. Okay, that's what this is suggesting. Okay, the space in between here, the green line and the cycle, is referred to as the divergence or the space. Okay, the divergence or the separation that Michael talks about in the training. Okay, it's like a slingshot. You're pulling back the rubber band, right? That's what that green line is saying. Okay, the cycle is saying momentum is bearish. The green line, together with the price action here, is saying, nope, it's a pullback and an ongoing downtrend. All right. So when step 1 likes to match, and step 2, the normal thing is happening together with step 3, okay, this is just a pullback and an ongoing downtrend. You got all the ingredients to create a trade. All right. All the variables there are there to execute. All right. And what you'll end up doing in the end is you'll end up going inside the Dom here, which is this tower here, and getting short. And we make money if the market goes down in our direction. Okay? That's what you're looking for. Okay? Basically, it's 3 simple rules. Okay, when you break it down. All right? 3 simple rules. Now, I said the trade exists down here in the slingshot, right? I'm going to tell you why. We said that this cycle, the fact that it's red, it's telling us, hey, the momentum is bearish. The momentum is bearish. The momentum bearish. The green line pulling away together with this, right, is normal, right? Just a pullback in this ongoing downtrend. What's supposed to happen after this is the green line is ultimately supposed to come down and gravitate into the cycle like it does here. From there, to pull away. Get back into the cycle, pull away. Back into the cycle, pull away. Until that cycle now turns blue. And now the momentum is bullish. And we're looking for bullish momentum and bullish divergence. So then we're looking for a green line to separate itself from down below. All right. And the normal thing, cycle pulls away, then gets into the cycle. All right, let me tell him to call. I'll call him back. 1 second. All right. So this little action that you're seeing here, the pull away, the pull away, the pull away, okay, that's a normal thing. All right. So when the green line is pulling away, right, price action should pull away. And as the green line gravitates toward the cycle and touches it and closes the gap, what's supposed to happen with price is the price should make a new pivot low. Okay, and when this converges, okay, when that green line gets into the red line, this is the point where we take profit, because we expect this to happen over and over and over again. So technically we should be selling this rally, selling this rally, selling this rally, and then as that momentum turns blue and now we're looking for bullish movement, right, we should be buying this dip and buying this dip. Okay, that's why the trade exists down here in the slingshot. Okay, because that's a normal thing to happen. All right, every trade has an 8 tick stop attached to it, outlined here. Okay, so if you're brand new, if you're trading gold or crude, you're risking $80 a contract. If you're dead wrong, if you're trading the ES, it's closer to $100. If you're trading the YM, it's $40. Okay, if you're dead wrong. Okay, so that is the rule set in a nutshell. Okay, this is the same setup we're going to look for. Okay, in the next 45 minutes. If something fires, we'll go inside the DOM, as I said, and we'll put the trade on. Okay, I'm going to make some other points. Okay, I'm going to label over some issues that I want you to get in good habits of doing. Okay, so I'm going to go over that. So maybe traps that people fall into along the way. Okay, because maybe they don't know better or they get hypnotized by the action. Okay, so I'm going to point that out. Okay, but we're going to try to do it in slow motion so we can, cut it up together and answer any questions you have. Okay, so that's a game plan. All right, so here we go. In fact, let me shoot 1 second. I'm gonna try it again into demo mode here. Okay, sorry, 1 sec. All right, stand by. Getting into demo mode because I'm going to be very transparent. Okay. All right, so now we're in demo mode. So let me shut down the live. Okay, I'm in demo mode. All right. Okay, so now you're seeing the same indicator set, okay, on the demo as the live. Okay, that doesn't change, okay? So the first thing we do, okay, when we're looking at the markets, and something that you should have on your sheet of paper, if you're writing things down, the number one thing that should be on your piece of paper is this: are we trending? You should be writing that down. Are we trending? Okay. We're on a 4-tick range chart. Okay. I'm not asking you to go to an hourly or a 30-minute. Okay. Here's what I'd like you to get in a good habit of doing, and this will be written down too, just underneath. Are we trending? See the zoom out button here, this red magnifying glass? Get in the habit of zooming out, hitting that button 2 or 3 times. Okay. This will tell you or allow you to look left. Okay. Are we making higher highs? Okay. Or are we just trading sideways here? Okay. If you hit the zoom out button, okay, this will give you a bigger picture on whether or not we're trending or not. Okay. If you get in the habit of hitting that button, this will probably keep you out of a lot of bad trades. Because here's what happens. Inside the training room, you're going to be looking at Mike's charts, right? And he's got 3 or 4 or 5 up running. And what you're looking at is something that's blowing up like this. So you really can't tell whether something is trending or not. Okay? So if you get in the habit of doing this, okay, you'll see if the market is making higher highs or lower lows. Okay? Here's another thing to keep an eye on too. If you're not sure if the market's trending, number one, don't push any buttons. So when in doubt, stay out. But also dynamic support and resistance dots, these green and red dots here, that is a good clue. If they're side by side, they look like a pair of choo-choo tracks going down the railroad track, that's an indication that we're trading sideways. Okay, if they're side by side like this. Okay, so again, 2 points about trending. Number one, are we trending? Number two, Bert said to get in the habit of hitting the zoom out button. Okay, so that's that button here. And three, if I'm not sure, Bert said not to push any buttons. And number four, he said, hey, you know what, I better look at dynamic support and resistance. And if they're side by side, we're not trending. Okay, so those should be on your piece of paper right now. All right, because that's a big trap people will fall into. They're buying and selling while the market's trading sideways and they're getting whipped around. They don't see it, and it's not your fault because you might have the chart blowing up like this. Okay. All right. So the question is, are we trending? Are we making higher highs? Yeah, we are. We are making some higher highs. My only concern is, notice this high here. Okay. We should have some kind of reaction off of it. So what we might be doing is expanding the sideways action a little bit further. Okay. What I do like is that we broke out of this recent congestion. See the dynamic resistance, and we traded above it. All right. So that makes me feel a little bit cozier that maybe we are moving up. Okay. So the question is, Bert, are we trending or not? Okay. And the answer is yes, I think we are. Okay. Step number one, bullish cross. The MA1 is blue and crossing the BBC. So we're looking for buying opportunities. Looking for buying opportunities because the MA1 is blue and crossing the BBC. Okay. Step two, what's the normal thing for the market to do? Gravitate toward the BBC. What's the BBC again, Bert? The green line. Did we touch it? Yes, we did. Did we close in the direction of the trend? Yes, we have a blue candle. Okay, we have a blue candle. So step two is right here. All right. Our eyes gravitate toward the slingshot. Is the cycle blue? Yes, it is. Do we have bullish divergence? Is the green line underneath it? Do we have that space? We also have the space too. So we have a lot of good things going on there, right? So let's do this right off the bat. Let's go in and buy one. Okay, and there's a few things I want to point out. Okay, so we had the pullback, the BBC with the up close. So what I did is I ended up left clicking in the green right here. Okay, that's where we're long from. If you're not sure, look at that nice green horizontal line. Looking up here, positions, +1 at 28.35 and a quarter. Also, your P&L might be moving if you also have that set. Okay, so there's plenty of spots where it says, you know what, you're long the market. Wake up. All right. Let me add this to it because it happened right off the bat here. See this Tinker Toy triangle at the top of the DOM? Notice how I left click on it, the bottom of the DOM opens up. Okay. It's called the bracket option. And what that allows me to do is this. Remember I said back here, every trade has an 8-tick stop attached to it. What the bracket option allows me to do is as soon as I enter the market, as it did here, it automatically puts a stop loss behind it for me. I don't have to do any clicking. All right. So if I left click on this and I select sell stop and buy stop, but then I right click over the buy stop, factor in ticks, and I right click over the sell stop and go factor in ticks and make the factor in 8. Right here, it will automatically move my stop or put my stop 8 ticks away. All right. So as I said earlier, if I'm dead wrong, I lose $100 a contract. All right. So here's the stop. It's right here. And that's what Michael is doing in the training room. He's got a bracket order in. All right. Money management rules. Okay. Once we get into a trade, what happens next? So here's the scoop. If the market moves plus 4 ticks in our favor, 1, 2, 3, if it's doing now, we move the stop to break even. Okay, move the stop to break even. So something must have happened in the marketplace that I'm moving the stop up. Until we're out of the trade. Okay, until we're out of the trade. Now that's what just happened. I just got in and got out. So as I said earlier, this is where we got long, right here. Okay, and the green line was pulling away, and what we expect the green line to do is ultimately get into the cycle as it did here. Because what do we expect to happen again? The green line to pull away and get back into the cycle. And the green line pulling away as it's doing now, and then ultimately getting into the cycle. Okay, now there must have been something newsworthy that just came out. Okay, so it's one of those things that just happened to work in our favor, but that was the entry. It had all the variables that we kind of look for. Okay, so unfortunately toward the end there it got really fast and furious, really did, to slow it down a little bit. Okay, but that was the action right there. Okay, so we were congesting here a little bit, back and forth, back and forth, back and forth, a little sideways action. So that told us, hey, stay out, stay out, stay out. And then we started trending again. We got above those dynamic resistance dots. Okay. All right. Now let me make another point, because it's happening right here in the first chart. All right. So 1 second. Everyone else is asking what's going on. All right. So I was going to make a point here. Okay. And the point was this. The normal thing for the market to do after the cross is to pull back to the BBC, correct? Okay, it did it here. As I said earlier, ideally, we want everything to be the same color, correct? Okay, ideally, we want that cycle to be blue, like it was back here when we got into the trade. Okay, that was right here. Okay, we had a blue cycle and divergence. Okay, notice what's happening here. Once we get back to the BBC and we have the up close, the cycle is red. Okay, so right now it's telling us, number one, this isn't the highest probability trade setup. It's watering down the probabilities. It's because the cycle is red. You notice how it's at a 45-degree angle now against us? Okay. With that up close, looking at this action, okay, that is no good. Okay, that's one of the big traps that people fall into. That's one of the biggest disqualifiers. Okay, the cycle being the wrong color. All right, number one, that's bad for the home team. But the fact that it's on a 45-degree angle is is disqualifier number one. Okay, the other disqualifier is the market's not trending. The market's not trending as it was doing here. That's the other one. We don't push any buttons. Okay, that's the other disqualifier. The third disqualifier, okay, which almost happened right here, all right, is when the black step line gets into the BBC as it does here. This black step line is great for trailing stops, but when the BBC does get into, when this black cycle does get into the BBC, that's the third disqualifier. Okay, so disqualifier one is the cycle being the wrong color because it's watering down the probabilities, but it going against us at a 45-degree angle. The lack of trend, okay, is another disqualifier. But the third one is this black BBC, the black step line getting into the BBC. That's the other issue. Okay. All right. So something must have happened while we were in there. So all good. Maybe that'll create some volatility that we can, find some more setups. So I'm going to switch guns. Crude's up $1.20, so something must be going on there in the crude space. Stand by. Okay. Crude oil right now, just a hot mess. We're definitely trending here, but there must be something going on in crude, so I'm just gonna stay away from it for now. Okay. Let's go to gold. Okay, gold. Okay. We're looking at the August gold. The first question on our sheet of paper is, are we trending? We talked about zooming out. Are we making lower lows? Yes, we are. So we are trending. Okay. We got past that one. So that's good. Okay. Some after the fact stuff. The normal thing after the cross is for the market to pull back to the BBC. Okay. That happens here and on the down close. Okay. Is the cycle red? No. It's blue. And it's at a 45-degree angle. Okay. So this close here is step number 2. But with this being a different color, which is bad for the home team, and pitching at a 45-degree angle is a disqualifier. Okay, we would not push the button on that. And then you're going to say, well, it went down. You would have made some money. Yeah, you would have. Okay, but most of the time that'll work against you. Okay, so for the moment, until the gold can make some lower lows here, we're standing at parade rest in the gold. Okay, we're doing nothing. The market needs to make a lower low. Okay, we want everything to be the same color. Okay, easy and obvious. Okay, is our motto. Okay, all right. Let's see if crude oil chilled out a little bit. A little bit. Okay. Let me show you something else. Okay, because this is important. Here's a good habit I want you to get involved in. Okay, so here we go. We're going to ignore trending action for the moment. Okay, but I want to stress this point. Okay, we're looking at crude on a 4-tick range chart. Here's what I want you to do. As soon as you get a bullish or bearish cross, this is a bearish cross, right? Because the MA1 is red. I want you to activate the trend line right here. Okay, I want you to engage it. Because here's what you're going to do. As soon as you get that cross and the market starts gravitating toward that BBC, I want you to get in the habit of drawing trend lines. Okay, drawing trend lines. Because there's a couple reasons why you do it. Number one, the market might have so much bearish or bullish momentum, it may not get here. It may not do the normal thing. Okay, and if it doesn't, and it closes under this trend line, then there's some action to take. All right, so that's reason number one. The second reason too is that what if the cycle turns color on us? Well, number one, we know that waters down the probability, right? That's not necessarily good. However, if it is flat and it's not at a 45-degree angle against us, like this is right now, okay? If it's flat like this, all right, the trend line is required. So you might as well get in the habit of drawing it in ahead of time. The trend line is required, but also a close below the trend line is also required, okay? And so this candle combined with this cycle, okay, is required. All right, so that's what we want to get in the habit of doing. Okay, so let's see if that happens while we're tracking stuff. Okay, all right. So crude oil. Now we have a bullish cross. The MA1 is blue. Are we making any higher highs here? No. So right now it's doing the normal thing. It's pulling back to the BBC, but we're really not making any higher highs. Okay. Do we have a blue cycle at a good slope? Yeah, that would get me excited. Okay. But the green line is below. We have that divergence. Yes, we have a little bit of divergence. Okay. So it has a lot of the variables. It needs to make a higher high. Okay. We go to the natural gas. Okay. Number one is the market trending. Bert said to zoom out to get a larger look at the landscape of the market. We have resistance here. The dynamic resistance points are telling us. So for the moment, no, we don't have a trend in the natural gas. Okay. What we do have is a bullish cross. The MA1 is blue. What we were told to do is after the cross, activate the trend line and get in the habit of drawing the trend lines because we never know if it'll get back to the BBC. Well, it did. Not only did it get to the BBC, but it also closed in the direction of the trend. Okay. Do we have divergence? Yes, we do. We have a blue cycle and we have space. All right. So the close of that candle combined with this is steps number 2 and 3. Okay. However, we're kind of lacking that trend, the higher highs. Okay. No, we don't. You can, if there's enough space, yes. But if we're making higher highs, yes, that's fine. Okay. When I'm staring at this Mark's question is, so we don't want to trade in between those lines, dynamic support and resistance. If there's enough space, yes, there has to be enough space because this might act as resistance, right? My hesitation is we had some resistance over here, just in about the same spot, all right? So the answer is kind of twofold. Could you have taken this? Yes. Would you have taken on a little bit more risk? Yes, because you were fighting this and this. However, what I got excited about is the slope. It's blue and it's got a pretty good slope to it. Okay. So, yeah, that close there is okay. All right. But I think you were taking on, it's not so easy and obvious. Okay, Mark? But you'll as the years go on, you're going to say, oh, Bert mentioned about the slope. All right. And you're going to find out that's got some weight to it. Okay. Same color with some slope. Okay. I'd feel comfy cozy about it. All right. So we talked about the natural gas kind of spinning its wheels, getting texts. So that means Okay. All right. So let's move forward. Let's go on to the currencies. Michael trades the euro a lot. Okay. So let's talk about that. Notice the first thing I do, I zoom out. Are we trending? Are we making lower lows? Yes, we are. Okay. Again, here's one of those situations where the market does the normal thing, pulls back to the BBC and has that down close. This is the wrong color and has a bullish slope to it. So even though the market goes down and it looks great after the fact, with the close of that candle, with the upslope, wrong color cycle, and it going up at a 45-degree angle is a disqualifier. Okay. So with the euro, what I would tell you now is we better make a lower low before you take any action. Okay. So the euro is off the table. British pound, we are making some lower lows. Here is one of those examples where you can draw a trend line. Okay. It doesn't quite get to the BBC and does close below it. Okay. Right there. That qualifies as a potential shorting opportunity. Okay. All right, so hold on. It's my phone buzzing. All right, trying to sell me some medicine from Canada. Nope, I'm not ready for that. Okay, let's go to the Swiss franc. Same thing. After the cross, we activate the trend line. We start drawing trend lines. There is a close below the trend line. Okay, there's that scenario where it has so much bearish momentum, it can't get to the BBC and do the normal thing. We have a red cycle with a nice slope. We have the separation. Okay, right here is a shorting opportunity. Okay, now we have a double bottom in place. So now we're looking for more action. So for the moment, okay, the Swiss franc is off the table. The Canadian, zoom out, has a double top in place. Dynamic resistance side by side. So nothing to be done there. All right, one sec. All right, hang with me, guys. I'm almost done. All right, I'm back. All right, so the ES for the moment is not trending, right? As you can see, we're trending sideways. I didn't notice the first thing I do is zoom out, right? So now we've created some boundaries here. So we really need to break above 28.44 or really break down before we can get bullish or bearish, okay? Let's go back to crazy crude because that was rocking and rolling, okay? All right, so we're seeing some really tight candles here. So we'll table the crude for now. Looks like it's a little jittery. All right, so let's try the natural gas and see what's going on there. Okay, that was that bullish cross we've seen in the pullback to the BBC. That's fine. So for the moment, that's just a missed opportunity. And that one wasn't really trending because we had dynamic resistance side by side. And we said before, hey, that's not good for the home team. Let's go look at the gold. And the gold's wound up pretty tight, so there's nothing to do here. Let me add this. Okay, I am looking at the S&P, right? I'm on a 4-tick range chart. Okay, the same rules apply. Okay, whether you're on a 4-tick range or an hourly or a 30-minute or a daily. Okay, the normal thing for the market to do after the bearish cross, right, is to pull back to the BBC. This is a daily chart of the ES. Okay, after the cross, the market gets to the BBC and it fails. The market is there also. So we had a bearish close today. The S&P would be in a position to go down. Would be in a sell mode. Okay, so if you're on a 4-tick range, if you're on a daily, if you're on an hourly, it all is the same setup. Okay, sometimes it's choppy, sometimes it's trending. Okay, just keep that in mind. The tools can be used on larger time frames. Okay, and I kind of led into that because sometimes we have guys that are just into trading the YM and the NASDAQ and all that other stuff. Okay, and this market could get real crazy real fast. Okay, it's almost untradeable on a 4-tick range chart. So my suggestion, if you're into the YM or the NASDAQ with a mini Russell, go to the 8-tick range chart, the 8-tick range. Okay, again, it's going to be the same setup. Okay, which means bearish cross. Let me get my marker. Bearish cross, pull back to the BBC. Do we see one here? Here's one finally. Okay, looking for a close in the direction of the trend. Do we have that separation? Yes, we do. Okay, now right here, look at what's happening. This is a warning flag. It's blue, and now it's got a bullish tilt to it, right? So if I'm looking at this chart on the NASDAQ and an 8-tick range, I'm not selling it, no matter what happens here, even if it falls apart. Okay? So again, I want you to say, look, you might say, hey, I'm a larger time frame dude. Okay, this 4-tick range thing is, too quick for me. Don't discount it because it can be used on larger time frames. Okay, it's the same trade setup. And right now, they're offering, micro S&P minis. Okay, so you can actually give yourself some exposure on some larger time frames. Okay, so that's a huge advantage. And you don't have to take on so much risk. But if you have, some tools, or if you have some opinions that, hey, I want to be short, but I'm not willing to take on a ton of risk, and now we offer micro E-minis, that might be a solution. And the margin's only 700 bucks. That's cheap. Okay. It pays, instead of 50 bucks a point, it pays $5 a point. So if it does go against you, it's not going to hurt as bad, but it's going to allow you to, maybe shoot a few bullets, okay, at a few spots, or not take on so much risk, okay? And you know, you don't necessarily have to do one at a time. You can do two. And if the market does go down, you can peel them off one at a time. So it gives you a lot of flexibilities. So don't discount the larger time frames, but also don't discount that micro E-mini S&P, because it's a hot thing right now. People are trading it, and for good reason. Okay, not everyone's timing is dead on. Would I trade the micros scalping? No, I would not. Larger time frames, I would strongly consider it. All right, back on the path. It's almost 2 o'clock, which is fine. Let's see if we can find something else to get involved in here. Okay, notice how I'm zooming out, okay? All right, so we're just starting to get the bullish cross. That means the red, blue, the MA1 is blue and crossing the BBC, okay? So that's good. All right, now, are we trending? No, we're certainly not trending up. We're kind of just sideways here. So I think the crude, we're just gonna kind of watch it. Let's look at, see if the S&P is offering us anything. Okay, still in that sideways action. Okay, still in that sideways action. Let's try a currency. Aussie dollar is sideways. Notice zooming out. We got a little messy action here. Nothing in the peso. The Canadian dollar. We would have to make some higher highs. Okay. Here's that example where we pull back to the BBC. This is our first up close. Okay, we're not trending because dynamic resistance is side by side. Okay. But notice with the up close, the black step line is piercing the BBC, so there's that disqualifier. Okay, the cycle is red, watering down the probabilities, but now at a 45-degree angle. That's a disqualifier. We have a double top, so the market is not trending. So that's the other disqualifier. Okay, so the Canadian is offering us a ton of examples of what not to do. Okay, don't touch any buttons here. I think it checked all the boxes for disqualifiers in that one picture. Okay. All right. I think a lot of these markets are falling asleep, kind of stuck in a range for the moment. So I'm going to call it quits because it's a little bit after 2 o'clock. All right. So this has been recorded. All right. So you can go out to YouTube, and in YouTube, you can search CFRN Thursday, and I've recorded all of them. They're in there, and you can review them. And I label over the same points. Number one, are we trending and getting in the habit of zooming out? Okay. Two, the other thing I labored over is using the trend line. By the end of the day, you usually have a ton of trend lines drawn. That's a good habit to get into. Okay. And again, the reasons why we draw the trend lines. Okay. Number one, we don't know if it'll get to the BBC because that's a normal thing for the market to do. But the other thing is, what if the cycle turns color on us? Okay. Well, we know the trend line is required, and then we're going to need a close on the other side of that trend line. So that also comes into play. Okay. The color of the cycle. Okay. Yes, you're going to see Michael take trades when that cycle is a different color. But if it's at a 45-degree angle, okay, against you, no, don't push any buttons. Okay. It may look it may not look like it's at a 45-degree angle. It might be like a 20 or a 30 or a 15. The bottom line is, if it's not easy and obvious, don't do anything. Okay, you're going to be on a 4-tick range chart, and you got about a half a dozen markets to look at. So just don't do it. Okay. So for the moment, those are some of the traps that kind of people fall into. All right. So if you review them and go over them over and over and over again, hopefully you stay out of those traps. Okay, and then you get back on the path of working your way on being successful at this. Okay. So I'll see you tomorrow morning. I'm in the room I'm in there every single day. I'm just in the background, letting Mike do his thing. He steps away. I'll make some observations. And I do this every Thursday. So if you're serious about this and you're trying to get yourself mentally prepared to do this successfully, I think listening to these videos and watching them is a big plus one for you. Okay. So that's it. Calling it quits. We'll see you next Thursday.